showcase the research that AASB commissions. I'm sure the chair and I will be talking about them throughout the day. So just a few housekeeping matters. I have been given a housekeeping draft with me. Here it is. So follow the direction of the Grand Hyatt staff in the event of an emergency. When you hear the sound, beep, stay still. If it's a sound of whoop, you need to start moving. Proceed past the escalators for the bathroom. The bathrooms will be on the right-hand side. Morning tea, lunch, and afternoon tea will be served in the pre-function area outside this room. If you have pre-organized a dietary requirement, please make yourself known to the Grand Hyatt staff for access to the dedicated dietary table. The post-meeting networking drinks will take place in the Mayfair pre-function area just outside of this meeting room. And you have got the passwords for the Wi-Fi if you need it. Also, just to remind everyone to turn your phone to silent mode and do not turn it off, because you'll have the opportunities to ask questions through the platform which this QR code will take you to. Because we have a smaller crowd today compared to the last 2 days, there will be roving mics as well for you to ask questions throughout the sessions to have a more engaging conversations with our presenters and also the panel members. So with that, I'm now going to invite our chair, Dr. Kit Kendall, to give an opening remarks.
Thanks very much, Eric, and good to see everyone here again for day 3 of what's been a very interesting and informative 3 days of research activities. A little bit of background to what you're going to be hearing about today. A couple of years ago, we found ourselves in a situation where we had some additional funding over and above what we normally have to be able to fund our activities. And consistent with the strategy that we've been pursuing for the last 5 years or so, the idea that we came up with at the AASB was to engage with the academic community and to use this additional funding to fund research projects that were relevant to our technical work program. So this is part of our very strong push to engage more closely with the academic community and trying to encourage the highly relevant research to be undertaken relevant to our work program. So as part of that, we set out a tender process where we invited submissions for possible projects, and we were very pleased to receive over 90 submissions as part of that process, and we wound up funding 25 of those proposals, which wound up covering 12 of the identified research projects that we'd put forward. Today you're going to be hearing about 3 of these. So the first on service performance reporting, which has been on the AASB agenda for many years. For those of you that have been following our activities for a while, and I'm seeing a couple of wry smiles in the audience here. It has been on our agenda for a while, and it is something that we're continuing to push. And I do believe Michael Davin mentioned this yesterday. Yeah, the days are starting to blur, but yeah, yesterday. So there's a connection, if nothing else, with the events that we've been having. We'll also hear about a project on valuation being a cornerstone of financial reporting, which has been consistently raised by our stakeholders, the concern that current disclosures provide insufficient information about how items are valued, which includes concerns around the assumptions used and the estimation process that's involved. And so this session will explore how valuation can close the expectation gap and strengthen trust in financial reporting. And we'll wrap up with a presentation on the connectivity of financial and non-financial information, which is one of the hot topics of the day, of course. Today, where connectivity is concerned, we're focusing on the not-for-profit perspective, which is a little bit of a different focus to what we normally speak about. These discussions highlight the importance of evidence-informed standard setting, which I raised in my opening remarks on Monday's session. This is something the AASB is quite proud of, and we continue to pursue in all our activities. We value research and evidence as the foundation for credible, practical and forward-looking standards. By engaging with academics and researchers such as yourselves, the board ensures that policy decisions are not only responsive to stakeholder needs, but also grounded in rigorous analysis. This collaboration strengthens the link between theory and practice, ensuring standards remain relevant in a very rapidly changing environment. The collaboration potential is quite significant between the academic community and the AASB. We have a number of outlets available through that engagement. Further details are available on the AASB's website. Go to the tab that is marked Research Centre and further details are there. A very broad overview, especially for those of you that weren't here to hear about this in days 1 and 2. Quick plug for our Research Fellow program, which I think we've got is very well populated for the next 2 years, but still gaps. So if anyone's interested, please get in touch with us if you've got a sabbatical coming up or some such. Of course, the Research Forum, which we attended on Monday, as well as the Dialogue Seminar Series, which are opportunities to promote directly research that's been undertaken, and also our SSRN Working Paper Series. Like I said, further details of all of these activities and more are available on our website. With that, I'll hand back to Eric, and thanks again for coming today.
Thank you, Chair. So yes, there are lots of opportunities for academics and researchers to engage with standard setters. In fact, for the last 2 days, we had a lot of discussions. The reoccurring theme was, how should standard setters think about cost and benefits analysis? What evidence should standard setters think about before making any decisions? And for the next 2 sessions, 2 speaker guests that we have invited will be talking about these very issues. So the first speaker that I would like to invite is Harry Greenwell, and the presentation is titled Evidence in Policymaking: What, Why and How. Harry Greenwell is from the Australian Centre for Evaluation. He joined the centre in 2023 and brings several years of experience in evaluation with a strong focus on experimental methods. At the Behavioural Economics team of the Australian government, he oversaw more than 24 field and survey experiments, along with related qualitative research. He has also held roles at the Australian Treasury and previously researched poverty and inequality at the University of Canberra, with academic qualifications in economics, philosophy and mathematics. Harry combines analytical rigour with practical experience in applying evidence to policy. Please welcome Harry Greenwell.
Thanks so much, Eric. It's a pleasure to be here. And let me just start by saying that having attended a few events like this one, day 3, you can be feeling invigorated and stimulated by all of the presentations, but it could also be a bit of work to stay the course. So I thank you for coming along. I hope I can give you a bit of food for thought this morning. So I'm going to be talking about evidence in policy making. I'm going to be focusing on the work that we do at the Australian Centre for Evaluation around policy evaluation, and I'll talk in particular about the role of impact evaluation. Just before I start, I'd like to acknowledge the traditional custodians of the lands where this event is being held and pay my respects to their elders past and present. So let me just tell you a little bit about the Australian Centre for Evaluation that's based in the Department of the Australian Treasury. We are proud of the acronym. We hope we're serving up ACEs, that we can be the ace up your sleeve. But more seriously, when we move on from our terrible puns, our mission is to improve the volume, quality and use of evaluation evidence across the Australian government. That's a pretty bold mission, and it's certainly not one that a small team like ours is trying to do alone. We do it in conjunction with evaluation units across most Australian government departments and a whole lot of other players in the evaluation ecosystem. So we try to be very clear about what our role in fulfilling that mission is, and it boils down to 4 key areas of focus. The first one is about a leadership role. We are, if you like, the hub in a hub and spoke model, and so we see ourselves as having a role in promoting the Commonwealth Evaluation Policy and the Evaluation Toolkit that both sit on our website. Our second area of focus is on high quality impact evaluation. That's something I'll be talking more about today. Pardon me. Our third area of focus is about building evaluation capability across government. And finally, we focus on evaluation planning and the use of evaluation evidence, especially in the budget process. So that's enough about our organisation. I wanted to give you a little bit of a preview about what I hope to cover today. To start, I just want to acknowledge that my topic, evidence in policy making, is very broad. I'm really just touching on one aspect of that policy evaluation. Obviously, there's much more besides. I'm going to start with questions and move to answers. And what I want to say, first of all, is that there's a very wide range of different questions that policy evaluations can seek to answer. I'm going to then narrow in on one set of questions in particular. Thank you. These questions are around impact and effectiveness. Did the policy, the regulation, the initiative work? And if so, how much of an impact did it have? I'm going to argue that answering this question is important, but it's hard. And it's, I would say, valuable to have a perspective of constructive scepticism when we're looking at evaluations that seek to answer this question. That we should try to take the most out of them that we can, but we should, I guess, interrogate the assumptions that sit behind them. So, to begin, when we talk about evaluation at the ACE, we're talking about the systematic and objective assessment of the design, implementation or results of a government program or activity for the purposes of continuous improvement, accountability and decision making. In practice, there's an enormous amount of different stuff that government does, giving rise to a whole range of different questions and a whole range of different approaches or methods to answer those questions. I'm going to give you a rough taxonomy. It's not perfect, but I think it gives a bit of a picture of the range of questions we might seek to answer. I think one broad set that you can ask comes under the umbrella of process evaluation. Just as an aside, I think process evaluation is terrible branding. If I had control over terminology, I would try to find some better branding for it because it sounds dry and dull. But all the questions about whether your initiative is being delivered as intended. Is it on time? Is it on budget? How's it being received by regulated entities? How's it seen by the regulators? How's it seen by service providers or participants? These are all really important questions, and they're really the questions that you want to answer first, because if these things aren't going well, then there's really no point moving on to the question about how effective your program or initiative is, which is the fundamental question of impact evaluation. But even if you've established that you're delivering your initiative as intended, that it's proving effective, you still get to the question that Eric alluded to earlier about its cost effectiveness, whether it's the best use of resources or whether there's a more cost-effective way of achieving the same result, and that's where we get to economic evaluation. So the ACE's overall mission is to promote better evaluation in whatever form is most appropriate for the questions at hand, and yet we have a specific focus on impact evaluation. And the reason for that is twofold. The first is that we see it as being a really fundamental question for decision makers. When Treasury naturally has a role in the budget process, and when we're providing advice on budget proposals, fundamental question is this program working? Is it going to work? How much of an effect is it going to have? You can't really get to the question of cost effectiveness until you've started to engage with that question of effectiveness. So it's a very important question, but it's also a difficult question to answer because fundamentally you're trying to get at an issue of causality. How much is the program driven changes? How much is the regulation driven changes? How much would those changes have occurred anyway, regardless of the initiative? So I'm going to delve a bit deeper into this question of did it work, does it work, and talk about the promise and perils of impact evaluation. To be clear, the main question I'm focusing on here is just the simple one of what was the effect of the policy or program or regulation on one or more outcomes? There are a whole lot of subsidiary impact questions you might want to ask around for whom it was effective or not, why was it effective or not, in what contexts is it effective. But to start with, was it effective on average, and if so, by how much, is the question I'm going to start with and focus on today. So, as a simple illustration of what this could look like, if there's a change in the legislation or a ruling from the Fair Work Commission, we might, in relation to the minimum wage, we can ask the question, what was the effect of a change in the minimum wage on the employment rate? And we ask that question, then we say, what sort of answer might we get to that? And I want you to imagine that we run a series of evaluations around the impact, in this case, of the minimum wage on employment. And the first possibility is that we're getting, the true result is that bullseye in the middle. Each evaluation gives us an answer that is aiming at the bullseye, but it's pretty scattergun. We're getting accurate results. They're all aiming at the bullseye, but they're all over the place. So any individual evaluation is quite imprecise in its answer, and so it doesn't give us a high degree of confidence about the evidence that we're getting. A second scenario, which I'd say maybe is more problematic, is we've got the sharpshooter who's always missing. And so we have the risk of being misled here because we have results that would appear to be very precise, but they're precisely wrong. And so what we're really looking for is an evaluation that both has accuracy and precision. And so sometimes you'll hear me use the term like trying to avoid bias in our estimates, and that's really just, for those who aren't familiar, jargon for saying we want an accurate result, a result that's aiming at the bullseye rather than missing to the right, as in that middle illustration. So I'm going to talk a bit about the challenges of getting accurate estimates of impact and avoiding the risk of bias in some of the different approaches that we can take to answering this question. So broadly speaking, when we're trying to answer questions about impact, the starting point is to ask ourselves, what would have happened if the regulation, the policy or program was not introduced? This question is one of what was the counterfactual? And the point to note here is the easy thing to do is to say, oh, I can find a group of people who weren't subject to the regulation or policy, and I can compare their outcomes with those of the group who were subject to the regulation or policy. The risk, of course, is that there are systematic differences between the two, and some of those differences will be easy to measure. There'll be things like age or education or income, and we might be able to control for those using statistical techniques. But there's a whole host of other things we might worry about, which could go to attitudes towards risk. It could go to motivation and ambition. It could go to genetic predisposition for diseases. It could go to trust in institutions. Some of these will matter, some of them won't, but they're terribly difficult to measure. And we are going to worry that the two groups are systematically different, and it's that systematic difference which is introducing the inaccuracy, the bias, into our estimate of impact. And so The challenge for impact evaluation is to come up with a credible counterfactual. At the ACE, we argue that the starting point, amongst the many tools that you can use to try to come up with a credible counterfactual, the starting point should be to look for a well-designed randomised trial. Often that won't be feasible. I'll talk a bit about what you do otherwise, but we think that you should start there and consider whether it might be feasible first before moving on to other techniques. Let me just explain briefly why we see randomisation as such a powerful tool. So the starting idea is that you begin with a sample of the population who are going to be subject to the policy or regulation of interest. You randomise them so that it's equivalent to tossing a coin. If you get heads, you go into one group, tails, you go into another. You've now created two groups that are going to be very similar, not exactly the same, but very similar on a whole range of characteristics. The ones that are easy to observe, like age and education, but also on the ones that are difficult to measure, difficult to observe, like motivation, risk aversion, and the like. So this is where we've got the credible counterfactual, two groups that at this stage are very similar. We then give one group the new policy or program or regulation, the other one receives business as usual. Finally, we track the outcomes. We compare the average outcomes for the treatment group with those in the control, and that gives us the average impact of the initiative or policy. So the first thing I want to say about this perspective of constructive scepticism is that even though we advocate randomised trials as being a powerful tool when they're feasible, we should not be mesmerised by the word randomisation alone. Even with a randomised trial, we need to be careful about the risk of bias. So there are various ways in which the bias or inaccuracy can re-emerge after the randomisation process occurred. One might be that if in the data collection, when we're tracking outcomes, if we can't track outcomes for all of the participants and we're missing, say, more from the control group from the treatment group, we have the risk of bias re-emerging in our impact estimates. If we have spillovers where some of the benefits of the policy are transferred across from the treatment group to the control. So an example of this might be an education program, where some of the people who go into the educational training program talk to people who didn't, they share what they've learnt, and so then you've got the benefits spread across both groups. And now you no longer have an unbiased estimate of the training program's impact. And finally, you can have an issue around what are called evaluation-driven effects. Sometimes you might worry that people behave differently because they know that they're part of a trial, they know they're part of an evaluation, and that alters the way they behave. So even with a randomised trial, you want to interrogate the assumptions. You want to see whether those assumptions are being spelt out and justified in studies that are using this technique. But I suspect it's going to be rare that the AASB is going to be able to apply an accounting standard randomly to some entities and not to others. I appreciate this, and there are a range of other impact evaluation methods that can be used in those situations. And when they're well designed, they can do as good a job, I would argue, as a randomised trial, but there are risks. And so I want to move on to a bit of a cautionary note, and I'm going to do that by through a recent paper that did an interesting thing where it started out by running an evaluation using a randomised trial, and it was a very well-designed randomised trial which gave very convincing evidence of impact. But then it evaluated the same initiatives with the same data set, but using non-experimental, non-randomised trial techniques. And obviously the hope would be that you could find these other techniques, these other statistical methods that recover similar results to the randomised trial. And then you would know that if the randomised trial isn't feasible, you can rely on one of these alternative techniques instead. And maybe you know that I'm going to lead you to a pessimistic conclusion on that front, but so I've given away my, dropped a bit of a spoiler there. But anyway, so this was not a policy evaluation, it was a business evaluation. It was run through Facebook. It looked at 15 ad campaigns that were conducted in 2015. Being Facebook, the sample sizes were enormous. You had between 2 million and 140 million users in each ad campaign. And the outcome of interest, as you'd imagine, was the volume of purchases on the advertiser's website. So What the experiment looked like in practice is that Facebook ran an ad auction. In this case, they were wanting to test the impact of the Jasper's Market ad campaign. So if Jasper's Market was going to win the ad auction for the treatment group, their ad would appear. But for the control group, they would take out Jasper's Market and they would put the second place in the auction. In this case, that sort of blue image of a building was for Waterford Lux Resorts. And so now you've got two groups, one who've seen the Jasper's Market advertisement, another one who saw just some other ad, and they tracked purchases for both groups. The important thing is that this allocation between the ones who saw Jasper's Markets or didn't was determined randomly, and so the two groups of Facebook users are going to be very similar on a whole range of characteristics that might influence their purchasing decisions. And so then the interesting thing is that they went and used the massive data that they had from Facebook to take people who saw the advertising campaign and compare them with a group of users who didn't see the advertising campaign. Now, as I said before, you then worry that the group of users who didn't see the advertising campaign are going to be systematically different for some reason. They might use Facebook less often. Maybe that means that they make online purchases less often, something like that. But Facebook collects an enormous amount of data about us, and so they had an enormously rich data set to try to control for differences between them. And they didn't stop with what Facebook collected. They went and linked in data from the US Census based on the postcodes of the individual Facebook users and controlled for some of those postcode level characteristics as well. So they had a very big data set with a very strong opportunity to try to control for systematic differences, and they used a whole range of quite sophisticated statistical techniques and to test out how they each performed. I'm not going to go through all 15 ad campaigns. I'm not going to go through all of the statistical methods. What I'm going to do is pick out two of the campaigns, and I'm going to talk about the results from the randomised trial first, which we can treat as a bit of a benchmark of the effect of the ad campaign. I'm going to contrast it with three of the better performing of the alternative statistical methods. So the first campaign, I would say, was a big success. If I was an advertiser and I saw my purchases go up by 30% amongst those who saw the ad versus those who didn't, I'd be prepared to pay a fair bit of money for that. However, if I'd taken the results from some of the other statistical methods, I would have probably paid well over the odds, somewhere between 2 and 3 times as much as the ads were actually worth, because these statistical methods were consistently overestimating the effect of the ad campaign. And this was the typical finding across most of the ad campaigns, that they got the direction of the impact correct, that the ad campaign was successful, but they tended to grossly overestimate the impact of the campaign. But even that wasn't always true. So in another case, the ad campaign had a small effect. It was statistically significant. It was a very precise estimate. It was a positive effect. But if you had looked at the other evaluation techniques that were used, you would have concluded that, in fact, it backfired. The ad was so awful that people said, I'm damned if I'm going to buy that product. I'm going to go somewhere else instead. So you could have been even more seriously misled. So the caution here is not to give up on these alternative impact evaluation methods, but just to be aware that sometimes you're going to get very precise but very wrong answers from them. And so the assumptions that are underlying these techniques matter. And I think as users of evaluation evidence, we should at least be looking to see whether those assumptions are spelt out and those assumptions are defended. We won't always necessarily have the technical knowledge to understand those assumptions ourselves, but if those things aren't called out, then I think that should be a reason to worry about the veracity of the results. So, just to wrap up, I've started just by acknowledging that there's a lot more to evidence in policy making than policy evaluation, but policy evaluation is a pretty big space. There's a wide range of questions that we can look at using policy evaluations, ranging from the terribly branded process evaluations to impact evaluation to economic evaluation. I've argued that the question around impact to us, is a really critical one for decision makers, but it's hard. It's hard because we're trying to establish causality, because we're trying to strip out the specific effect of an initiative from all of the other things that are going on at the same time. We argue that we should start by looking for a well-designed randomised trial where that's possible, whilst acknowledging that often it won't be feasible. And when we turn to the other methods, we recognise that we can't let the perfect be the enemy of the good. As policy advisors, we need to take the best evidence that's available, apply judgment and provide advice to government about the best course of action. But at the same time, we need to be careful that in assessing the evidence that's available, we're not being seriously misled, as those advertisers may have been if they just relied on the alternative statistical methods that were evaluating the impact of their ad campaigns. And so the answer to this, I think, it's a little bit of an oversimplification, but I think there are two key components. One is careful planning, thinking ahead about the evaluation design and the assumptions that underpin it, how those assumptions can be justified. And then when we're approaching the evidence that we receive from impact evaluations, applying this perspective of constructive scepticism, where we look for the assumptions that might be underpinning the evidence and question those first, not just reading the abstract or the media release that accompanies the evaluation. So thanks very much. I hope this gives you some food for thought, and I look forward to some questions and discussion. Thank you.
Thanks, Harry. And just going to turn this on. Is the mic on? Yeah, thank you. All right, so we've got about 8 minutes for questions for Harry. I'm going to look at this, if you've got any questions from the audience. While I'm looking at checking whether we've got questions from the audience, Harry, I actually have a question for you. You talked about the importance of impact evaluation to determine whether an initiative works. However, it's not always possible to construct a credible counterfactual. In that case, how should we evaluate the effectiveness of programs or intervention or initiatives?
Yeah, it's a good question, because even though I didn't list all of the different techniques that we can use, for those of you who are familiar with some of the jargon, there's things like a discontinuity design, a difference in difference design, interrupted time series and synthetic control. A whole lot of jargon for those of you who aren't steeped in this sort of world. But even when we go through all that whole series of techniques, we're going to find that there are times where the data is just not up to the job, or there's something about the nature of the regulation or program that means that those methods aren't a fit for the questions that we're trying to answer. And I think then we go back to an approach which is a bit more like detective work in a way. And it's a matter of assembling pieces of evidence against the theory of how the initiative, how the regulation is meant to work, and looking to see whether there are pieces of evidence that cohere with the theory, or pieces of evidence that tend to disconfirm the theory. Now, this is going to be much more judgment-based than doing the hard analysis on a randomised trial or something like that. And so I think it requires more discipline about trying to specify in advance what sort of evidence do we think would give us confidence that this is working the way it's intended, that it is flowing through to having intended effects. What sort of evidence do we think would disconfirm the underlying theory that the program or regulation is based on? I think that it can sometimes be helpful in taking that sort of approach to look at where the existing evidence is stronger or weaker. So if you think there are various steps in the chain from introducing a new accounting standard to the results that you're looking for, maybe one step in that chain is pretty well evidenced, and you want to focus your evidence gathering on the other steps in the chain. That could be one thing that can help. I think the other thing is that in those situations, often we need to give due weight to qualitative evidence as well. I've focused on quantitative techniques in this presentation, but as a rule we promote mixed method evaluations. We find that we learn the most if we use a combination of methods to answer a combination of questions. And I think that if you identify the right stakeholders or key informants, think carefully about where they might have a vested interest. If they give answers that just conform with the vested interest, you haven't learnt much. But if they give an answer that runs counter to that, you've probably learnt quite a lot. And you can start to specify some of that in advance. And potentially you can take those pieces of evidence together. And in the pragmatic world of government, as I said before, you take the best available evidence and then apply a judgment to provide advice to government about the way forward. So we find that there are many cases where we can use one of these impact evaluation methods to construct a counterfactual, but we find many other cases where we can't, and then we look to this sort of detective work type approach instead.
Thanks, Harry. The other question came in is, should evaluation be involved in the project designing phase to be more effective?
Yeah, I think so. I think that there's a big overlap between doing evaluation well and just doing good program design well, that the best evaluations are often the ones where there's been a lot of thought already given at the program design stage, partly to interrogate that kind of theory. So another bit of jargon, we sometimes talk about a theory of change, and really that's just trying to step out exactly how we go from running a training program to seeing improved employment outcomes, and or whatever it might be. But typically any theory of change is going to rely on a whole number of assumptions about what else is available to support people in addition to the training program, how people are going to engage with the training program, being clear about exactly what outcomes we're looking for. Is it really just employment outcomes, or are there other things that we're looking for as well? So I think that the integrating evaluation thinking with program design thinking can be highly beneficial if you have the time and resources to do it.
I've got 4 more minutes. I can ask the last question. So one of the... Oh, sorry, Carolyn. Do we have a roaming? I'll walk to you.
You might have a very important person online asking you a question. But Harry, thank you so much. This is interesting. In accounting or in standard setting, we often have a learning curve. So we try and balance the costs and the benefits. And I always say that investors or people that read financial reports want ice cream and chocolate sauce and hundreds and thousands, and they want everything. But there is a cost to providing that, and I'm sure you will have seen it in labelling and other areas, not just accounting standard setting. So some of those costs include learning curves. And how do you balance that learning curve, which sort of sees an escalation of costs and then we come down to a new normal? I've got some ideas, but I'd like to hear whether there's things that the Australian government has done or seen in your research that might look at that. And if not, you can think about it and we can talk about it over the break, and Eric can ask his other question.
So I think what you're getting at here is the idea that the cost of introducing the new accounting standard might be very high initially as the regulated entities are coming to terms with what it all means. Once they've got their systems in place to implement it, it then becomes much more straightforward after that. Okay, well, I've understood the question. How do I go with an answer? Yeah, look, I think... So something that Eric and I were discussing a bit beforehand was some more general questions about cost-benefit analysis. And I think that the first thing I'd say is that I worry that cost-benefit analysis gravitates too much to the quantitative, and that the risk as a result is that you get a partial picture captured in a number, people focus on the number, and they don't focus enough on the caveat saying here's the things that are left out. And so the question then is, if you're going to do something instead of or as well as the number, what is the method of presentation so that you can try to convey, here are the range of considerations that go into sort of the cost side of the ledger and the benefit side of the ledger, and perhaps lay it on the decision maker to say, we've provided some judgment, but we're going to highlight for you the degree of confidence or uncertainty associated with some of the different parts of the judgment that we've made. But at least leaving in some... So maybe it's clear that there's going to be big upfront costs to implementation, but you hope that the costs will taper quite quickly and quite substantially. You say, look, it's hard to be certain about that. Businesses are screaming at us and telling us it's going to cost us to the wazoo for forever and a day. We think it's going to taper off. We don't have full certainty of that. But if you don't have that somehow in a dashboard or some sort of rubric, you're missing part of the story, right? And so we see this with it's a slightly different scenario, but I think the same issue about the timing of costs and benefits emerges in sort of a lot of the early prevention type activities, so sort of supporting early childhood development, big upfront costs. You do a cost benefit analysis even after 3 or 6 years after implementation, and the cost benefit ratio looks pretty bad. But in effect, they've built in an assumption of 0 benefits beyond the 6-year mark. And I think that's kind of criminal because on the one hand, they're holding tightly to what they have firm evidence of, but they're then making an assumption which is patently false, that there's going to be 0 benefits thereafter. We don't know what the benefit's going to be, but it's not going to be 0. And so I think you'd be better off putting something in there. Maybe you don't want to put it in quantitatively because it's too rubbery, so then maybe you want to have some sort of rubric which spells out, here's the full range of benefits or costs that we think are there, and then maybe try to convey something about the level of confidence or uncertainty you have. That's the best I've got. Tough one, yeah.
Thanks, Harry. Tough question, but good answer. So thank you, Harry, for the presentations and your discussions. Please give Harry a round of applause, please. And I'm sure the next guest will be able to answer that question too, Carolyn. The next guest speaker, keynote speaker, is someone who we are familiar with. I don't feel that she's left AASB for a long time. I feel that she's always been around. Professor Emeritus Anne Tucker from University of Western Australia and former member of the IASB, where she served from 2017 to 2025. And has played a pivotal role in shaping global accounting standards and is widely recognized for her research on IFRS adoption and its impact on the professions. Drawing on her experience at the IASB and AASB, Anne brings a unique perspective on how evidence shapes, or sometimes falls short in guiding global accounting standards today. Her keynote, The Illusion of Evidence is Standard Setting Really Informed, will offer a valuable insights into the role of standard setting. So, Anne Tucker, welcome to the stage.
Good morning, and thank you for that introduction, Eric, and it's a great pleasure to be here. Thank you so much for attending. I welcome those in the room and those online. So my topic is The Illusion of Evidence. Is accounting standard setting really informed? I'd like to approach this question by thinking about 4 things. Firstly, I need to start with the role of accounting standard setters and the approach that they have to working with stakeholders. So the IASB, the AASB and other national standard setters work closely with stakeholders. That's part of the process. I'd like to talk about some specific examples of evidence-informed standard setting. I'm going to consider some examples where the IASB has collected evidence and then describe the response to that evidence. And then I want to answer the question, does the IASB use information effectively? So firstly, the role of accounting standard setters. The IASB is well known for the statement of what it's trying to do: develop high quality, understandable, enforceable and globally accepted standards. To do this, the IASB follows a specific due process. Now you can find out what that due process is. It's set by the trustees of the IFRS Foundation. It's transparent, it's available for you to look at and interrogate. So you know what the due process is that the IASB follows, and part of that due process is very specific on engagement with stakeholders. So recognising that information is essential to the standard setting process, and then actually requiring engagement with stakeholders to gather evidence. So if the gathering of information is essential to make standard setting informed, then the consultation process becomes very important. I'd like to refer to three parts of that consultation process for the IASB. Firstly, it's all stages. Secondly, global. And thirdly, transparent. So what do I mean by consultation with stakeholders in all the stages? If we think about agenda setting, many of you are aware of a process that the IASB goes through to choose what projects it works on. In the last agenda setting consultation, big projects for intangible assets and cash flows were brought onto the work program. Consultation also reflects the scheduling of the work, and indeed the IASB will take on things that stakeholders consider require urgent attention. This happened during COVID with changes to the leasing standard. It's happened more recently with something described as nature-dependent electricity. The consultation affects the scoping of projects. In the last year, the IASB has been very busy trying to scope the intangible assets project. It's a very big beast, and how does the board determine how to approach it and what to work on? So scoping is done in consultation. And then there are the consultation documents themselves. And during my time on the board, FICE, financial instruments with the characteristics of equity, large discussion paper, exposure draft, all the changes in the proposals reflected a consultation process. Similarly, dynamic risk management, now called dynamic risk accounting, was a consultation process with changes to the proposals. Climate-related risks and other uncertainties is another current example where the work is substantially altered through the consultation process. Secondly, global. The consultation happens through committees and meetings. All the acronyms are up there on the screen. So you can see a diverse range of stakeholders are met, be they investors, preparers, people from emerging economies, all sorts. The aim is to reach out into different industry groups and sectors, get feedback from different countries. Individual companies provide feedback. Thirdly, this is a very transparent process. The meetings, the documents are publicly available. People can attend meetings in person, people can do it online, people can catch up later. And board members and staff are very approachable. They spend a lot of time with individuals and groups, and they hear a lot of what's going on. Let me talk a little bit about examples of how the evidence is used. I've just talked about how it's collected, but how it's used and how it influences the process. I'd like to start with the primary financial statements project that resulted in IFRS 18, a big new standard applicable from January 2027. Detailed proposals were put out in an ED, and they were going to affect all the IFRS preparers, and there were going to be significant changes in certain areas. So you would expect feedback to come, and it did, and it was diverse, and it came across many different areas, many different groups gave that. Let me give you some examples of how we responded to that feedback we received. One of the proposals was to drop the mixed presentation within the statement of profit and loss, and also for those that did a by function presentation to require by nature in the notes. There were significant changes there. The prohibition on mixed function was taken away as simply something that wasn't going to work, it wasn't going to be viable. And then the requirement to do the by nature disaggregation of a by function presentation, that was also changed majorly on the basis of feedback. People from corporates told us that it would add 3 years to application and XX million dollars to implementation if we went on with that. The board listens. The board I was part of was a very pragmatic board. The end proposal was 5, I can see someone smiling, 5 individual line items is the end proposal that people will work with, and we got acceptance from all parties on that. Location of the share of profit, joint ventures and associates, that will be below the operating profit line in the statement of profit or loss. There are some companies that put it above the line, and they're adamant that's where it belongs, and we listened to the feedback, but we didn't change that. It will sit in a line underneath. It can be highlighted in all sorts of ways, but it will sit in a line underneath the operating profit, and that's because investors were very clear that to put it above the line of operating profit will distort the margins. Unusual items. The proposals said, let's define unusual items. Let's get some really clear disclosure around unusual items. Lots of feedback on that. Yes, let's do it, but nobody could agree on the definition. And we saw that we were on a very difficult path if we tried to come up with a definition that would be acceptable to constituents. We stopped. We said, no, we're not going to continue on that. And MPMs, management performance measures, proposed a disclosure of management performance measures, defined them, proposed the disclosure in a single note inside the audited financial statements, and went ahead with that, managed to get the regulators on board for that. Going ahead, looking at extractive activities, the IFRS 6 standard, it was called an interim standard, so it was inappropriate for us to have a look at what we should be doing with this interim standard. We got clear evidence from academic research and the research of the staff that there was diversity in accounting policy choice around exploration and evaluation expenditure. There was inconsistent disclosures and lack of disclosures about resources and reserves, well, indeed, about the actual policies that they were choosing. So you would think, once you hear these words, oh, there's diversity and there's lack of disclosure, you think there'd be a standard-setting case. So it's the board's job to look at that evidence and decide, is there a case for standard setting? Is there a problem? Is there something that the board can move on? Can we do something? What are the cost benefits? In this case, there was no support for users for the change. Users said, we can live with that diversity. There's certainly no support from the preparers for the changes, but we consulted with the users. The users didn't support. They said we can live with this diversity, and we get the information about resources and reserves that we want from other sources. On a cost benefit and evaluation, there's not a case for standard setting here. And the third example I'd like to refer to is the business combinations, goodwill disclosure and impairment standard project. So there's an ED with lots of proposals in there. It's in responding to user demand, where users are saying, we cannot evaluate the acquisition decisions of corporates with the information that we currently have. We believe we need better information. The impairment test or impairment expenses on their own don't give us enough to evaluate and hold management to account for those very important and expensive decisions that they're making. The board and staff developed a number of proposals. They're done in consultation with stakeholders. And then when we have those proposals, we receive feedback, very strong feedback in this case from preparers about their concerns with these proposals. Their concerns related to issues around commercial sensitivity, litigation risk, the idea that forward-looking information was going to be required. And then the staff and board engaged in more consultation to try and work out where the compromise position is. If you're following this project, this is what they're doing right now. They're getting to decision points, and every single one of those decisions is on compromise based on the evidence that they've received. Very much qualitative evidence, but the board also will seek the quantitative evidence because numbers are strong. We're numbers people. Numbers are strong, but you can't always have the numbers. So qualitative evidence is really important. When we think about effective use of information, I want to talk about the inputs and the outputs. So ideally, the requests for information, they're clear, they're understandable, they're relevant. We all know that the answers you get depend on the questions that you ask, and it's really important that the board is structuring those questions. So I spend a lot of time with staff looking at the questions they're going to ask to consultative groups. The questions, all the board members would look at the questions that are going to go out in discussion papers, in requests for information. If we're not asking the right questions, what chances are we getting of getting the quality information that we want? So standard setters need to be clear about the problem that they're trying to address and communicate that clearly with our stakeholders. So problem definition is a key thing in standard setting. Some projects can be very wide, very large, rate-regulated accounting, huge project. Other things are intentionally scoped to be narrow in focus for the board. So equity method, some people wanted that to be quite large, but the board went after some very specific things. Then ideally, the information that comes back should be accurate, should be sufficient, should be reliable. Now, the IASB and other standard setters know that they receive things that have a particular perspective to them. Of course they do. They come from particular interest groups. So it's the job of the IASB to be able to evaluate and consider where the evidence has come from. If you read staff papers, you'll see that staff identify the industry group where the feedback's coming, or the country, or how pervasive is the feedback. Is it a few, some, many, all, almost most? We have all these special words that are defined for us for the board papers, defined in a qualitative way. How about on the output side? Effective use of information. What would it look like? I can only go back to the aim of the IASB standards. The aim of the IASB, the production of high quality, understandable, enforceable and globally accepted standards. So the last bit is perhaps the easiest of those four, globally accepted. And so we're all aware that the IFRS standards are in use in around 150 countries, but we're also aware they get used in very different ways, but globally accepted. But the other terms, high quality, understandable, enforceable, these are very judgment-laden terms. Do the standards meet these tests? Could they be better? Could there be more? I've heard feedback, and it even came up on Monday. I heard some very positive feedback, which was encouraging. But I also heard feedback that the standards could be more comprehensive, they could be more consistent, they could be more complete. That's great, and I'm really happy to hear that kind of feedback. But just remember, put your money where your mouth is. This is not a cheap business. IASB has post-implementation reviews, and I had to think about those as Harry was speaking, where post-implementation reviews look at whether the standard is operating as intended. And this is something the AASB is engaged in as well. So with a post-implementation review, it is a process for evaluating a standard. It has a very specific objective. Is the standard working as intended? So it's not a process for revisiting the fundamentals and rewriting the standard. That is not what it aims to do. However, it is a great opportunity to gather the feedback, to gather the evidence, and in the standard setting world, that evidence will be quantitative, work provided by coming from the accounting profession, coming from economists, coming from researchers in accounting and finance. So there can be quantitative, and a lot of it will also be qualitative. Quite a detailed process. IFRS 9 financial instruments, as a result of that process, changes were made to accounting standards, and indeed some ongoing projects still exist. Compare that with the revenue standard, IFRS 15, where the conclusion of the board was the standard is working as intended and changes weren't made. Now, not everyone was happy with that. There were some people that believed there should have been changes, but on balance, many stakeholders said, don't change it, don't change it, don't change it away from where it converges with US GAAP, don't change it, we've put our systems in place, it's been an intense process, it's been expensive, we do not want changes. So that leaves some people unsatisfied, but the IASB works on trying to find a compromise and trying to find a middle ground. There will always be criticism. Some people are critical because their particular issue is still outstanding and they haven't got what they want out of the standard setting process. Goodwill amortisation is the case in point. I can tell you that stakeholders globally are just so divided on this point, 50-50, and for the IASB to change, it's just going to be guaranteed to have 50% of the people that are not happy. The IASB has made clear what its view is on goodwill amortisation, where it sits right now within the scope of its projects, and there won't be any immediate change within this goodwill disclosures, that project. There won't be any change. But standard setting being what it is, there are some people that will just continue to lobby anyway. So, in conclusion, I think it's very clear that you couldn't do standard setting without the information flow. You do need it. The IASB and the AASB and the national standard setters have very thorough processes. They are visible. You can see the processes happening. So do I think the IASB is effective? I talked to a very good friend and close colleague yesterday who thought I was going to say no. I said, why would I say no on this? No, for me, it's a resounding yes. I think the IASB is really effective. The people who say it's not usually have a position, their position didn't get up, or the way they wanted things to go didn't go, or they actually don't believe in a technical expert group. They believe it should be under democratic election. There's all sorts of different perspectives, but given the model and given how it works, I think that the IASB does make effective use of the information. The IASB is a panel, a board of technical experts, and they aim to arrive at the best result based on their technical expertise, the best result for the wide stakeholder group. Everything they do is about a compromise. So people will continue to be critical, that's fine, but I think the key thing is to stay involved. So practitioners, there are many of you here and listening, please stay involved in the process because what you've got to say is vital. Academics, there are heaps of research opportunities. You have a role in terms of evaluating. You might choose to be evaluating individual impact of standards. You may be choosing to step back and look at bigger pictures, but many opportunities, and I would encourage you to pursue them. So, thank you very much. I'll stop here and go for questions.
Thank you, Anne. So, question time. We've got a few questions coming in from the audience. Perhaps start with the first question. When there is urgent problem, how does standard setters gather evidence? Perhaps, I guess the question was actually from COVID experience when in that period of time and things are so urgent. How can academics provide evidence and contribute to the standard setting process?
When there's something urgent that comes up, the board hears about it through all the different consultative avenues that I've mentioned. So through consultative groups, through all of their own contacts. There's such a great network. So the board will hear about problems. So if we hear something that's a problem in terms of the leasing standard, we might then want to go back and look at the literature review and see if there's anything in there. I mean, it's always difficult with academic evidence contributing to standard setting because of the time lags that are involved, and both the boards, IASB and AASB, really understand that there's a lead time on standard, there's a lead time on producing academic evidence. And so with academics, it's really important that they're aware of what the board's working on and what issues are, so that if they have something that's in process, they then might be able to have something to speak to an urgent issue. With urgent issues, board and staff can go to contacts that they have and say, have you got anything on this? Or how quickly could you get something on this? But that is generally, in my experience, not how it's been working. I don't think urgent issues has been where the academic strength has lied. But what has worked, of course, is post-implementation reviews, because academics have an excellent lead time on that. They've seen the effects analysis published when the standard was published, so they know what the questions are, they know what evidence is required, and then they can action on that. Yeah.
Okay. Thanks. And you mentioned that, is the mic on? You mentioned that before that sometimes the board may need to compromise in some circumstances, and I assume because you're dealing with so many different types of stakeholders and standards will impact different jurisdictions differently. How do you balance that with evidence that you gathered and also how much you can compromise when making any decisions?
I think compromise is fundamental, and it's going on all the time, all the time. So how do you get the evidence to help you make the decision? So when people put their hands up and start screaming about something, so equity method, there are people that are really distressed about some of the things inside that equity method proposal. So staff on board go to where that noise is coming from. So on equity method, the response from the UK was, we agree, full stop. And that's good. That's good. We like that, especially when it comes from somebody that has really looked at it in detail, and we know that they have given it good thought. They haven't just been lazy and told we agree. So that's great, but that's fine. So that sits over there. So we don't necessarily have to engage very much with them, but we certainly have to engage from the people in South America who are deeply concerned about the equity method proposals, that it has big meaning for them. So the point is to actually find out who they are, speak to them directly, and actually get into what the problem is. Try and find out what the problem is. Other parts of the equity method, people were saying, oh, we just can't do that. We can't do that. So the staff will go, well, you know, you've got to actually show me the worked example of why you can't do it. So it's really digging in and finding out. So it's really very evidence-based. It is. I mean, I'm happy to have questions that people that want to dispute and argue that with me. But what I learned while I was there on the inside for 8 years, it's really, really, you know, people not just making random decisions. They're evaluating the evidence as it's presented. The board may not do what the South Americans want, what those particular stakeholders want. They may not do it, but they'll understand the implications of not doing what that group wants.
Right, I've got 5 minutes. I'm going to ask the last question, but if any audience want to ask any questions, please let us know too. Should standard setters be proactive or reactive with evidence-informed process?
I think they're both proactive and reactive. They're proactive in a post-implementation review, actually saying, here's the effects analysis, go away, give us the evidence, here's what we want to know. You know, we want to know how this accounting standard has affected A, B, C, D, and it's all documented. As you know, it's a very long and detailed process. So by the time you get the standard, there is an effects analysis. So that's proactive, asking, and then it also standard setters are reactive because evidence comes in. Now, in the academic community, there's a lot of consideration of the limitations of academic evidence, and if the academics don't point it out, someone else will. But even board members know that. They know that they can take the academic evidence only so far, and then it sits with all the other evidence. So they're being reactive to what is presented and putting it together with the quantitative, the qualitative. Where it gets really hard is when there is a lack of evidence, missing evidence, so then they need to be reactive and go after it, and there's various ways the IASB and the AASB have done that. So it's getting it in, you know, trying to make sure we've got all of it that is out there, and then evaluating what has actually been presented. You know, what does this evidence tell us? How good is it? What does it cover? How's it been derived? All those sort of questions. So reacting to it in a very detailed way and then putting it together and making decisions.
Thanks, Anne. Last piece of advice. I'm pretty sure many audience through online and academics on the seats would like to get an advice from you. I think many of them are doing their best to do research that are relevant to the standard setters. Are there anything that you think they should do better?
There is a group within the academic community that really wants to do research that's relevant to policy setting, and that's to be commended. Much research is government funded, it's government money that's going in there, and it's great to see people who are committed to doing policy relevant research. Couple of areas, if I may, of advice would be to keep talking to the practitioners, because they're the people doing it in practice and they're the people who've got the experience. So be talking to practitioners, don't just stay inside your office or your ivory tower or whatever you want to call it, because to design better research projects you need to understand how it's working in practice. What was my second point?
I wish I knew.
My second point is that remember that you're wanting to do things that are policy relevant. Work out the parts that really speak to the practitioners and present that in a really clear, non-academic jargon way. And many of you are excellent at doing that. Many of you can do it. And you can have executive summaries and you can put it into plain English. And then by all means, you've still got to write for your journals and you have to put it in a way that the journal wants. But, you know, there's ways to segregate projects into the parts that can be parcelled up and relevant for the practitioners, and then further work creates things that's publishable. I think there will always be a divide there, but I think academics are very clever people and they can deal with that.
Thank you, Ed.
Thank you, Eric.
Thank you very much for your presentation. And,
Thank you.
With all those very helpful answers, I'll invite you to your seats. Okay, we now break for morning tea. Please enjoy the refreshments and networking opportunities. The morning tea will be just right outside of this room. We'll be back here at 11:45. Thank you.